Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies' SOFI stock and where the stock price could be in the next 3 years. We're also going to be going over their latest news updates, price targets, and we will determine if we should buy and hold the Sofi stock right now and where it could be in the future. We're also going to be going over the latest news updates for Palantir Technologies. We'll be talking about the newest price targets from analysts, as well as what are some of the top investors and holders of this particular company. Are there more individual investors, small businesses, or institutions owning this company, and what can these metrics actually tell us about this company and the future of it? So, if you want more videos on Sofi Technologies as well as Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below about either of these stocks, subscribe if you are new, and without further ado, let's jump right into today's stories. Now, before I begin, I want to tell you that I only own around a 4% allocation of Sofi Technologies and around a 3% allocation of Palantir Technologies in my overall portfolio. So I don't advocate for investors to go all in on these particular companies. There's a plethora of fantastic companies to buy on the stock market right now, and we should be safe and diversified so we can build wealth over the long term. Now, I personally like Sofi Technologies better than Palantir Technologies, considering the current stock market environment we are in right now. However, with that being said, let's jump right in to SoFi stock price targets. Right now, the current stock price trades for around $6 per share, while stock professionals believe the company is worth anywhere between $7 and $11 right now, which is why analysts currently think the company is undervalued, thus they give it a buy rating. However, what is Sofi Technologies going to be worth in the next 3 years? What does the growth trajectory of this company look like? Well, right now it's pretty hard to tell, considering that the overall stock market is having a tough year, especially for fintech companies, which would include Sofi Technologies. The reason for this is because investors are liquidating their high growth stocks and fintech companies and technology stocks, and they are buying either bonds or value stocks or stocks that give them a decent dividend. The reason for investors liquidating their growth and technology companies and going over into safer investments, which would include the liquidation of cryptocurrency assets, is because we are in a very high inflation rate environment, and to get inflation under control, the Fed is raising the prime rate, which is impacting interest rates across the entire economy. And this is going to put growth stocks at a clear disadvantage. Now, for some companies like Palantir Technologies that virtually have no debt and a lot of cash on their balance sheet, they shouldn't actually be hit as hard as other companies. However, right now investors are somewhat illogical in the certain stocks that they are selling. We also know that the overall market is feeling some pain because of high inflation and increasing interest rates, because the overall S&P 500, which is a stock market benchmark, has dropped by around 18.2% this year, while another index, such as the Nasdaq Composite Index, which is more technology heavy, clearly is in a full-on bear market where it's dropped by around 26%. However, what does this mean for Sofi Technologies and its investors? Well, clearly Sofi Technologies has been hit harder than both of these indexes, as it should, because the beta for those indexes are clearly much lower than Sofi Technologies, which is why I actually encourage investors to have a strong basket of stocks and not to just bet on a few stocks. Because would you rather have lost only 18.2% or 26%, or would you rather have lost 76% of your overall value? Because that's what would have happened if you didn't have a diversified portfolio, and that's how much Sofi Technologies has dropped since its peak. So with that being said, let's dive into Sofi Technologies and their overall business and what it could be worth over the next few years. As you can see, from their peak, the stock price has dropped dramatically due to the negative macroeconomic environment, but this shouldn't off-put investors, because fundamentally, I think this company is actually rather strong. The reason for the stock price falling is because their main source of revenue, which is their lending segment of their business, particularly refinancing student loans, has almost completely dried up. Now, they are still making a lot of money from this segment. However, because of the student loan moratorium, this particular facet of their business has not been performing very well. However, this has caused the company to diversify its revenue streams from its other two segments besides their lending segment, and they are radically investing and increasing the amount of revenues they are getting from other sources. So this ultimately just makes Sofi a better long-term investment. And when I say long-term, I mean you are willing to hold this company for the next 5 to 10 years, regardless of what the stock price is, as long long as you are already not overexposed. Now, to determine if you are overexposed to a single risky growth stock, such as SoFi Technologies, that is going to be up to you and your own personal risk tolerance. However, for me personally, I don't advocate for more than a 5% initial allocation. So I'm only going to invest around $4,000 to $5,000 into a particular company, and then I'm just going to let it ride, and that $4,000 to $5,000 could turn into a heck of a lot more than that, and I won't even take profit on it because I've already practiced proper risk management. I will just move on to another company that could give me fantastic growth over the long term. However, with the student loan moratorium ending, it looks like 2023 could be a very promising year for SoFi Technologies, but the remainder of 2022 could keep the stock price overall suppressed. Now, I do want to say that SoFi Technologies does have very impressive financials. They are scaling rather impressively. However, in the next article we're going to look at, there's going to be some pushback on what I just said. But I just want to highlight two main facets of their financial health, and that's going to be, first, their net interest income, or their NII, which has increased by around 111% year over year in the first 6 months of 2022 to close to $218 million, and this is thanks to rising interest rates. A lot of financial institutions, including banks, will increase their overall net interest income because banking institutions and fintech companies can actually hedge their bets by increasing their own interest rates to offset risk. This is why, during times of high inflation, investing into consumer discretionary stocks, healthcare, and of course financial companies are actually going to give you the best reward during this particular type of macroeconomic uncertainty in a high inflation rate environment and a high interest rate environment to offset the inflation. The company has also shrunk its overall net losses from $343 million down to only $206 million for the year. So again, we are seeing good improvement for the company shrinking its overall net losses. Also, lastly, I want to point out that their overall membership count has increased by around 69% from last year. So clearly, this is not only an innovative company, but the company is rapidly increasing and attaining new members. And as they bring in new members, their overall business model, which is a flywheel business model of upselling and cross-selling, is going to take effect, which is why I love this company, and I understand that this is a very successful business model. Another critical point that I want to bring up for SoFi Technologies' growth is their Galileo acquisition, which I've talked about a multitude of times. And basically, their Galileo platform that they acquired is basically a financial services application programming interface, also known as an API. And it basically allows various companies to access a payment platform that provides other types of institutions an easy way to create digital financial products. And some of their main customers would be Wise, Revolut, Chime, and Robinhood Markets. Many of you probably invest or use the brokerage that Robinhood provides, and Robinhood actually is a customer of SoFi Technologies since SoFi has acquired Galileo. So again, this is overall very fantastic. Now, some people might say that Robinhood is actually in direct competition with SoFi Technologies, or at minimum indirect competition, because they both operate brokerage platforms. However, I think that SoFi Technologies has a load more to offer than Robinhood Markets, which is why I personally like SoFi better than Robinhood as an investment. Now, what are analysts and other stock professionals saying about this particular company and their stock? Well, it says that it's growing very rapidly as a business. Right now, their estimated revenue is supposed to come in at around $1.5 billion this year, and that's supposed to increase to around $3.6 billion by the end of 2025. They also want to see their earnings per share, or their EPS, increase as well from a loss of 45 cents per share to break even in 2025. Now, depending on who you talk to, there are some very bullish reporters and stock analysts that believe this company could achieve profitability in 2023. However, I think that's overly bullish and positive. For me, I think the company is going to achieve profitability at the end of 2024, and if we take more of a neutral or even a bearish perspective, we could see the company turn profitable in 2025 onward. However, regardless of what you think of this company, we know this company will eventually become a profitable company, which is very good to know, at least according to current projections. Now, I like the author of this article because he's not actually an owner of SoFi Technologies. He says that he doesn't own the stock right now, but he has added it to a watch list, so he gives this company a hold rating. However, for me personally, I think, according to analysts, they want to advocate a buy rating, but for my portfolio, I already have a comfortable allocation to this company of around 4%. So for me personally, am rating it as a hold. We want to hold this company because the current macroeconomic environment is very uncertain right now. So I would rather just keep some cash on the sideline and not invest into risky, speculative growth companies. However, if I want to invest into companies such as defensive stocks or consumer discretionary stocks, or healthcare stocks, then I would advocate for that. I would definitely be for that. But for a single risky growth company, I'm not really about it. So this begs the question, is SoFi Technologies a buy according to others? Now, for me, I already told you what analysts are saying, and I already told you my personal opinion. But what about the overall market? How do investors and financial reporters and stock reporters view this particular company? Well, we need to view it with a risk and reward in mind. And right now, the risk in the market is very high, to where companies like FedEx are currently trying to reinforce their overall business because they want to prepare for this recession to get even worse and for the stock market to actually crash based upon economic forecasts. FedEx has literally warned that a global recession will take place, and they have reacted to this news by cutting their overall forecasts for their revenues by $500 million. So this is very negative for the overall stock market, and if you want more news on this, I'm not going to analyze this article, but if you want, I will link it down below in the description if you would like to read it for yourself. But overall, it doesn't look like companies such as FedEx have a very rosy view of the future of the stock market and the overall macroeconomic environment right now. It's clearly negative. And when we are in times of stock market uncertainty and economic uncertainty, we need to weigh our risk to reward by investing into fundamental blue chip stocks or ETFs, index funds, or mutual funds. This particular author doesn't want you to buy SoFi Technologies because he says they have deteriorating financials. And what does he mean by this? He means their total liabilities actually increased from around 4.48 billion as of December 31 of 2021 to $7.16 billion on June 30th of 2022. And the author also tries to convince investors that they have a bleak growth prospect. And he says that analysts are expecting revenues to increase by 41.4% year over year, to where in the fiscal 2022 third quarter ending September 2022, they're supposed to bring in revenues of $391.95 million. And to me, that actually sounds pretty freaking bullish, because if you can identify a company that's growing at over a 30% CAGR, or compounding annual growth rate, in terms of their revenue, this company is rapidly increasing. So I don't think this is bleak growth prospects. I actually think this is a very bullish sign. He also goes on to say that the loss per share of the company for the fiscal years of 2022 and 2023 come in at a loss of 32 cents or a loss of 10 cents respectively. However, again, this means the company could literally achieve profitability in 2024 or 2025, which again is very positive. So why not buy this company while it's trading at a discount if you plan to hold for the long term? But if you don't plan to hold this company for the long term and you want to make money in the next year or so, this company probably won't be for you, which is why the current article says that the proprietary power rating of this website gives SoFi Technologies an F rating, which means to sell the stock. However, I'm going to leave that up to you and your thoughts. Now, finally, we're going to conclude by talking about Palantir Technologies PLTR stock. And Palantir Technologies, if you didn't know, is a big data and analytics company that serves both commercial clients as well as government enterprises. Palantir right now and their PLTR share price is trading at $7.85, while professionals believe the company is worth anywhere between $6 and $20. Analysts say to hold this company, and I actually reflect that exact rating on the stock. I think this is a company to hold because I think the true value of this company won't be seen until 2025 or onward. So if you're buying now, you better be willing to hold this company at a loss for around 3 years or so. This Yahoo Finance article also points out that investors should be aware of the most powerful shareholders, or at least the most powerful shareholder group that has the most voting rights to dictate decisions that the company could make. Because he says currently that the biggest piece of the shareholder group, or the biggest piece of the pie, is currently held by individual retail investors, which currently make up around 52% ownership. And that's both good news and bad news. The reason it's good news is because we see that a lot of investors are very bullish and positive on this company, that they believe in the long-term fundamentals and the business model of this company, which uses a razor and razor blade business model. However, with that being said, it's also somewhat negative. This means that we want to see actually more institutions institutional investors and insiders buying this company, and somewhat less individual investors, because on average, insiders and institutions tend to make more money in the stock market than individual investors. So what about institutions? Well, currently, institutions account for around 33% of the company's overall ownership, and institutions often own shares of a company that is more established. So maybe in the future, we could see this institutional backing even increase as time goes on, because normally when companies tend to prove themselves and proves that their models work and become profitable, that's when we can see an increase in institutional backing. But 33% is pretty good. As you can see down below, we can see that it's not actually unusual to see insiders own a fair bit of smaller companies. And right now, insiders own around 10.7%, institutions own around 33.4%, public companies own 4%, the government or state owns 0.04%, and the public, which would be retail investors such as you and I, owns 52%. So now let's break these down. Many institutions measure their performance against an index such as the S&P 500. So we want these institutions, or these institutions at least are trying to outperform the market. So it's good to see a high amount of institutions are invested into Palantir Technologies because they believe in the future it will outperform the overall market. So it's good to see a good portion of this company is held by institutions. This suggests, or at least adds, some credibility to the overall positive investment thesis into this particular company. However, this is a double-edged sword, because if multiple institutions decide to change their mind on Palantir, they end up just dumping their shares, which could cause the stock price to drop extremely rapidly. On screen right here, you can see that their revenue projections and forecasts are in blue, which is overall very positive. Their earnings over here are in green, and right now it's at a loss. However, in 2025, the company is set to become a profitable company on a generally accepted accounting principles basis. We also see in orangish yellow, we see their cash from operations. And what I'm most bullish on about this company is that when the company becomes profitable, which I think it will in 2025, their free cash flow is going to be absolutely amazing, which is why if we use FCF models for this company, we get a share value, or at least a fair value price target of around $20 per share. We also note, however, that hedge funds don't own a meaningful portion of Palantir Technologies. However, on the flip side, we see very impressive institutions such as Vanguard Group, which is their largest shareholder, own around 7.7% of the overall outstanding shares, with the second and third largest shareholders owning around 7.1% and 4.4%. For the entity that comes in as the second largest shareholder, that's actually one of the founders, who is Peter Thiel, who jumped on Facebook and PayPal very early and became a multi-billionaire. So it's very good that this company also has Peter Thiel's backing, where he holds 7.1% of this company. We also know that the CEO, who is Alex Karp, directly holds around 2.6% of this overall company, at least in terms of their total shares outstanding. I also want to quote from the article, which says, "Our studies suggest that the top 25 shareholders collectively control less than half of the company's shares," meaning that the company's shares are widely disseminated and there is no dominant shareholder, end quote. And overall, this is very positive because it means that there is just not one group pulling the strings. We get very good diversity of a multitude of different perspectives, which hopefully will lead to the best decisions being made for this company. But ideally, I would want more hedge funds and insiders to own this company. That would give me more confidence. The overall general public seems to love Palantir, be very bullish on Palantir. However, I still think this is a hold rating, even though the majority of investors who currently own around 52% of this company, or make up their overall ownership of this company, are pretty bullish and would tend to disagree with me on that. Also, public companies own around 4% of Palantir Technologies, and that's neither here nor there. But overall, I would love to hear what you think about the fintech company Sofi Technologies and your personal price targets for it, or what you think about this stock analysis that we performed in this video by breaking down these various articles. And I would love to hear what your opinion is on Palantir Technologies, which is a big data and analytics company. For more videos on Sofi or Palantir, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.